Okie dokie. Let's take a deep breath. Exhale out deductions. Okay, we're not talking about it anymore. You know what we're going to talk about? Community Corrections Trust Fund. How many of you are aware that this went through in statute? Me neither. I don't know what it is either. That's what we're going to talk about. I'm just kidding. I know what this is. Okay. I know a lot of things, and this is one of them because I've had so many conversations with it. So as we start discussing this, if you have a work release program through Community Corrections, it's possible that you can now have a Community Corrections Trust Fund, okay? So this was from the Senate Bill 92 implementation. I'm going to go through the new sections in statute, and then I'm also going to go through our guidance because some of it, you guys will go, that's weird. That goes against everything that Stacy and Ricky have ever told me. And when you say that, you're going to go, yes, don't do that. We don't do that, okay? So that's what we're going to do. So we're going to go through the new 6 sections of statute. I think there's sections. Are there sections, Mike? There's sections.
There are sections. Be confident. You got it.
There are sections, okay? 6 sections. Okay, so the first one is this creation of a new fund. So refers to a county community corrections trust fund, okay? Easy. So that means we are going to have a new fund on the chart of accounts. Yay! We love that for us, right? Okay. Okay, operation of the fund. The reason I put these in here is because how many of you actually have went and pulled Senate Bill 92 and looked at the new sections of code? No, you didn't? How dare you not do that before conference? What? I pulled this all on there because it wasn't yet on the IGA's website, so I wanted to make sure you guys had the sections of code available. So the second section is a county that operates a community corrections program may establish a community corrections trust fund. Yep, we're aware of that. The county auditor shall administer a fund. Oh, it's your guys' fund. You're welcome. Okay. So it's established under this chapter, or this subsection A, the county auditor shall deposit all proceeds of commissary sales. Oh, this is getting interesting. Commissary sales, but we were calling it trust. Okay, follow me. It's gonna make a full circle moment, okay? So, interesting. Commissary sales. Money remaining in the fund at the end of the calendar year does not revert to the county general fund. Okay, so it's a non-reverting fund. I'm to maintain on the auditor's ledger. And commissary sales go into it. Okay, but it's called trust. I know, we're all confused right now. Okay, now revenue sources. This is where it gets interesting. Okay, the proceeds from commissary sales deposited into the fund under section 2 of this chapter, any amounts appropriated to the fund. Okay, I don't still know what that one means. So when I figure it out, I'll let you guys know. 3, any grants or gifts received by the county that are designated for the purposes of the commissary or community corrections programming. Oh, so I don't know if you guys are with me where I was when I first read this, but this statute is now allowing us to commingle revenue into one fund. Ugh, okay, I have a plan. Guys, so just follow me, okay? So statutorily, the revenue's allowed to go into this fund. That's fine, okay. Section 4, there's permissible uses for the fund. So the money in the fund may be used only for the following reasons: the inventory and operation of the commissary. Okay, now we're calling it a commissary, but it's a trust fund. See, we need to work on language, okay? Because we called it a trust. Now we're calling it commissary. So this is what I want you guys to think. This is a trust fund only in name, okay? It is really a commissary fund for community corrections, okay? They call it a trust. It's not actual trust money, okay? I just want to clarify that because this seems weird, okay? So you can use it for operations of the commissary. Rehabilitation and educational programming, facility improvements directly tied to community corrections programming, and staff training and equipment. Okay, those are very valid uses of the fund. We now know where those are in statute. Okay, there is reporting requirements for this fund, okay? Before March 1 of each year, Community Corrections Agency for a county that establishes a fund under Section 2 shall submit an annual report to the county fiscal body. It must include total amount of money deposited, total amount of money expended, and the balance of the fund on December 31 of the previous calendar year. Okay, so we're just reporting the fund activity. That's easy. We can do that. That's not a big deal. An annual report submitted under this section may include a brief summary of how the fund expenditures have supported community corrections programming or facility improvements. Okay, so there's going to be a clause under what the fund was used for and the activity in the fund. Community Corrections Agency shall also provide a copy of the annual report submitted under this section to the Community Corrections Advisory Board. Okay, so we're giving it to our fiscal body, so we're giving it to council and this advisory board. Okay, the last new section. The fund is subject to audit by the State Board of Accounts. The county auditor shall administer the fund in accordance with applicable public record and government accounting standards. Okay, nothing to do there. So, what are we super confused about? First, everything. Yes, that's how I felt when I read it the first time. However, let's go, okay, what can we do? We've clarified that it's not actual trust money. So it's not money that you are holding in trust for somebody else. That's not what this is. We're just calling it trust. It's really a community corrections commissary fund. Okay. When people hear that, they're like, that's weird. Why are we doing this? Is it like the sheriff's commissary fund? No, it's not, because you as auditors are holding it. Community Corrections is not holding this fund outside of the county ledgers, okay? That's why this is so different. It is your guys' fund. It still requires appropriation. There was nothing in that that said it can be spent without appropriation. I don't think. I'd have to go back and read it, but I've read it multiple times. So the fund has to be appropriated. You guys maintain the fund. We have an issue with commingling of revenue because we can have revenue from commissary sales. We can have grants, donations put into this fund. That's kind of alarming. So this is what we're going to suggest. This is going to be our guidance, okay? And we're planning for this guidance to come out in the June bulletin, okay? I will say it is with people that are above me reviewing this right now, so this is subject to change, but I think this is the only way that we can implement this fund and make sure that we are reporting it appropriately, okay? So please stop me as we go. So to implement this, Community Corrections Trust Fund, we're going to call it a trust fund because that's what statute calls it, okay? It's not trust. It's commissary fund for community corrections, so just remember that. So on our chart of accounts, we are going to create a Community Corrections Trust Fund, 1241. It will be on your guys' auditor's ledgers, okay? You are going to, auditors, okay? You guys are going to determine how to maintain these revenue sources, okay? So we have options. I think option 1 is easier, so I'm going to start with option 1. Option 1 is separate revenue funds. That sounds confusing when I say that, but you guys will go, I think I know what you mean. Or option 2, a single fund. So let's start with option 1, a separate revenue fund. So revenue will be receipted as follows. We will receipt proceeds from commissary sales for community corrections into 1241. And that's the only thing we're putting in that fund, okay? Then you say, oh, wait, you have more revenue that's allowed to go in there. Yes, I know. But if you chose option 1, this is your choice. You're then going to receipt your grants, local or federal, into either the federal series for 8,000s or local series, 9,000s. Okay, you're following me? You see what I'm doing? I'm separating all the revenue. because that's what you guys have been, I'm not going to say brainwashed, trained perfectly to do, okay? So we're going to keep going with that, okay? And then number 3, receipt gifts and donations into a designated fund, obviously for community corrections, into the 4,000 series. Okay, so I've literally proposed nothing new to you other than I'm going to make one new fund for you, and this is saying that those that have work release, that want to utilize a commissary, they can set up a commissary, have proceeds from the sales. Paula, don't give me that look. Okay, no one else is giving me a mean mug other than Paula currently. And I'm like, girl, same. But this is what we got to do, okay? So this is first option. So we're going to receive all revenue into separate funds. Then we just disperse from each fund, must be in accordance with IC 11-12-12-4, which is that new section of statute. Grant agreements and contracts. So all that I'm saying is with bullet point 1 is that since you are deciding to receipt all this stuff into separate revenue funds, then 1241 can only be used for the statutory purposes outlined in that fund, okay? I'm saying commissary sales go into it. You can use it for any of the statutory purposes. Then for donations, it's probably a restricted donation. What are the restricted donation uses? Probably for community corrections. What does your local ordinance say? Grants, local or federal, you use them in compliance with the grant agreement. That's how you spend. I'm giving you no new guidance here other than creating one new fund with new revenue and new uses, okay? So we like option 1. Do you want to see option 2? It's not fun. I'll tell you that. Option 2 is not fun. So, option 2, you receive all revenue, so grants, donations, and commissary proceeds into 1241. However, now that I'm commingling the money, I'm going to have to maintain a subsidiary ledger detailing all revenue received by revenue source and then disbursements from each specific revenue source. Because if I commingle all the money in one fund, and let's say you got a grant, a local grant, for a very specific community corrections project, but you put it in this fund, how do you know you spent it in accordance properly if you just put it all in there and you don't identify what revenue and what it was used for? You can't tell me you used it properly. You're going to say, maybe I did, but what if your local grant wasn't one of the allowable uses that's now set out in statute? You're in noncompliance. But you could say, well, hey, I spent it in accordance with the grant agreement. Well, your grant agreement, your local one was much more broad than what statute says. So now we're restricting the funds down to a more specific purpose, okay? Same with donations. Lots of departments now, with budgets being cut, are now going, hey, what other revenue sources can I get? And so they're going to commissioners and they're saying, hey, can I get more funding? And commissioners are like, you could do fundraising. Okay, here's fundraising. Go out and do it. Well, what if you get unrestricted donations? The second you put that money in this 1241 fund, you've locked down the uses. You can't use it for anything for community corrections, okay? So we would have to keep a subsidiary ledger, okay? On a monthly basis, then you would have to reconcile the subsidiary ledger to the county Community Corrections Trust Fund. Because I'm keeping a subsidiary ledger, but I have a fund over here. Well, if I'm recording, it's now 2 sets of books that you guys are now having to maintain and make sure that it's like drainage all over again, okay? Whew, heebie-jeebies. And you're probably gonna have to do it in Excel, okay? Or I guess if you wanna do it on a piece of paper, your option. I'm not gonna tell you what's right or wrong. Okay, so disbursements must be in accordance with 11-12-12-4, as well as any additional restrictions imposed by grant agreements, contracts, donor restrictions, or other local ordinances. Fund must be appropriated prior to the disbursement, okay? Do we have any questions on option 1 or 2? Yes. Yes.
We're creating one new fund, and then we're gonna designate an existing grant fund or 400 series
Yes.
that we only use.
You don't have to, so for option one, how many of you actually have donation funds set up for community corrections already? Not a lot, okay? I wouldn't set it up until you actually receive donations for it. Same for local grant funds. I would not jump ahead and say, hey, I need 3 more funds. I would say, hey, I need 1 fund for now, and then if for some reason you get a local community corrections grant or you receive donations for community corrections, then establish the funds, okay?
So in option one, we're not really putting the grants and donations.
You are not commingling any revenue. You're keeping all that revenue separately. Because I don't know how many community corrections that currently have voiced anything about wanting a commissary. Can anyone show me a raise of hands?
No, I just had a question. What
Yeah.
happens if your community corrections want you to put it in one fund? How?
To
I
me,
mean,
this
because
is an
it states that it could.
It says it could.
What's your argument to them?
You could. We're just going to have to impose more restrictions and that subsidiary ledger from our guidance. So our guidance is just expanding on that.
And I will say, my response to that would also be, look, it doesn't matter. If you think that's going to change anything in terms of the rules that allow you to disperse these funds in accordance with donor restrictions or grant agreements or under the permitted uses of this not trust but trust fund, it doesn't change anything. Like, the disbursements still have to be in accordance with all of the rules that apply to those funds, regardless of how it's accounted for.
Yeah. Oh, 100%. I could see community corrections saying that they did want this, or they want it in one fund, which is going to make you guys, auditors, the ones that actually have to maintain this. That's the thing. It's more work for you guys, but I would say I would prefer to do this from your guys' standpoint. And Mike, I think there's one more up here too.
Our county already has a commissary for community corrections.
Oh, that's cool. I was hoping you weren't going to say that.
But I do report it on our annual report.
Okay, so you guys do have it as a fund. Is it just maintained outside of the county's ledger and you use the supplemental to capture it?
Yes.
Okay. You're not allowed to have it, but now you're allowed to have it. You're welcome.
It was before all of us were here.
That is, you guys aren't the only county, okay? So the other counties that have been doing this have been written up, okay? Probably because it was not included on the AFR, it was just being kept off the ledgers, okay? So this is now your statutory allowability for them to have it. So you will now just not let them maintain it outside. They are gonna, you will have to maintain it on the auditor's ledgers moving forward.
Starting when?
I would do for this year, please. Oh, July 1. July 1. Sorry. Thanks, Mike. So look, I gave you some grace, okay? July 1. Get it together, and we'll go from there. Please, no one else raise their hand and say, I have one too. Go ahead.
So a couple years ago, our community corrections came over and the DOJ made them use certain numbers for each of their grants.
Well, yes.
And their funds.
Yes, federal grants, the way
and they
that
weren't even the 900 numbers. They made them separate a bunch of stuff.
they made them in the 8,000s.
Nope.
No?
Nope.
We might. Hey, by the way, I have Teresa Dawson from DOC sitting in the back of the room. You might want to find her after to discuss. She's
Okay.
over the field audits for DOC.
Okay, because they came over and they're like, we got to use this number, this for this, and this for this, and we can't cross money. So
Unfortunately, the way that statute reads, it says grants. My fear is that someone will try and put federal money in this fund. I really hope that they don't put federal money
they
in this fund.
haven't asked for a commissary, so
They haven't
and
yet.
they're Right, you're right, but the county has already had to take over some of their funding
Okay,
because their grants have been cut.
okay.
So.
And I think that that is what's happening. Teresa, you can correct me if I'm wrong, but I believe that is happening. Okay, Mike, I also have over here too. It's okay. And I don't know if there was anyone else to my left that I didn't see.
Okay, so we are similar to the county over here. I'm not sure who it was, but we have a work release program.
Okay,
And I believe they've been operating a commissary through that program.
okay.
Um,
It's okay. I knew that this was going to happen.
It is through their IDOC grant, though. We just use a separate location/department to
Okay.
track that information.
Okay.
So I'm assuming going forward, July 1st, we need to start separating that into this new fund. And I guess my question is if there's revenue in that IDOC, then how do we?
We might meet, by me and Teresa, might need to discuss with you
Okay.
about that. That
Be-
seems very specific.
Yeah.
And so I would like to talk about that after
Okay,
this presentation.
and the other thing, because I don't have my records right in front of me, obviously, we have a project income through the community corrections.
You do. So
And that's user fees, but
Mhm.
could that have also been where they were using their commissary?
whew, Teresa's just shaking her head. So she's doing how I feel. So we're going to have to talk, you're Huntington County,
Yes,
right?
correct.
So Teresa, we will talk with her offline.
Thank you.
No more bad news, please. We only have 1 minute. Then you guys get to take 20 minutes. Anything else? Yes, two in the back or over there. Hi, Michael.
Hi, a quick question, not saying that we're anything like any other county in this room. So, we have been asked, our community corrections would like to create this fund. So is there some place where we can get appropriate language rather than having to start from
So this is going to be a statutory fund, so you would just establish the fund on your records for 1241. So with statutory funds, you don't need a local ordinance because everything is set out in statute. If you are going to do it in like separate revenue sources, then if they do donations, you're going to have an ordinance for that. Local grants, typically it would be the local grant.
I
that-
like simple.
Okay.
We're good, we can stop.
Okay.
Let the next person in.
Okay. Thank you. Do you guys want to sit for like 2 more questions? Yes, okay.
Mine's not actually a question. I just want you to very clearly state that this pertains to only community corrections with work release programs.
Yes, it is those that have work release programs.
Thank you.
Which
Just-
that might not apply to lots of you. Does that not apply to lots of you? Okay, so please don't fret if that's not you. Did I just give you back some years of life? I saw her like, oh my gosh.
If our community corrections does not have a commissary fund, do we have to establish this fund anyway?
You do not have to. No. I would wait until they say, hey, we sold some stuff. I need to put my revenue somewhere. So if you would like to hide this information, I'm not going to say anything. So we are going to end on that funny note. I will see you guys in 20 minutes, and I think we get Mike back. So
County office, cities, towns, libraries, special districts. If you are audited by the State Board of Accounts, Chapter 1 applies to you. So we have made quite a few changes to Chapter 1 in the last 2 years. In fact, we made some changes to them in 2025. You guys might have looked at our uniform compliance guidelines and noticed that. And then just very recently, I mean, we're talking literally in the last 2 weeks, we have uploaded and published a new update to Chapter 1 of our uniform compliance guidelines. You can find them on our website. I've got the link right there. I would click it to show you that it works, but if I do that, the computer's going to get really mad, so I'm not going to click the link. But you have it there in the materials that Stacy is going to send out after this presentation to all of you. So you'll be able to find it. It's also super easy to find on our website if you're looking for the new version of Chapter 1. There are a number of reasons we wanted to make changes to Chapter 1. We wanted to make it so that the sections of Chapter 1 are now citable. If any of you remember the old version of Chapter 1, it was sort of just, we would have words with an underline and then a paragraph describing what the words above meant. And just about 15 pages of that. Now we actually have sections like section 1.03J or something like that, so that if one of your local officials is saying, what do you mean I can't spend MVH funds to buy my staff lunch, you can say, well, look, actually, section 1.04 of the State Board of Accounts Uniform Compliance Guidelines prohibits it. Here's the language, here's the section. We also wanted to make sure that we were clear that these are regulatory in nature. Our uniform compliance guidelines really are not optional, actually. I know the word guideline is there, but if you look at state code makes it clear that we can write local units up, and really we're supposed to identify non-compliance issues with our uniform compliance guidelines. So the guidelines, I think, over time had taken this sort of form where they were kind of a series of best practices where we would say, well, look, you should do this, or we would recommend that you do that. We've sort of done away with that language for the most part and turned the compliance guidelines, including Chapter 1, into more a series of regulatory, regulations. So the soft guidance like that in terms of best practices, you'll still see that, and we still want you guys to do things the best way, but that's more likely to appear in a bulletin that we're going to issue on a quarterly basis, and really the hard rules are going to appear in the Uniform Compliance Guidelines. So, all right, let's dig into some of the changes. Some of these are more interesting than others. Capital assets, so section 1.03F of our Uniform Compliance Guidelines, it now contains a 7th category of capital assets, books, and other. This was something that our friends over at the libraries really wanted to see, and so this actually came from one of our libraries directors, Beth Goss, wanted to change our Uniform Compliance Guidelines to include this category, but it does also impact other units, as you can see. The first 6 categories: land, infrastructure, buildings, improvements other than buildings, equipment, construction in progress, and now we have books and others. So this is a new category for everybody. Okay, 1.03L, commingling third-party funds. Monies and accounting records of an audited entity may not be commingled with the monies and accounting records of any outside organization or third party. Outside organizations are responsible for their own accounting systems. This was really an interesting one. Shortly after I started at the State Board of Accounts in 2023, I actually got a question. I think it was from a soil and water conservation district. And the question, it was one of those interesting questions. It was, we have this small group of sort of ad hoc people who help us out from time to time with volunteer projects, and they get donations from people, and we just keep them in with our money, and then we disperse them when they tell us to disperse them. We just need to know how to account for that. And I think that was sort of when the lawyers and accountants' heads all exploded, and we said, oh no, you should not be accounting for the funds of third-party organizations or ad hoc groups. Public funds should be kept separate from the funds of third-party organizations. We don't want you to do accounting for private parties on your books. That should be something that's done totally separately. So that seems really intuitive, I hope, to everybody in this room. It certainly seemed intuitive to me. And yet when we explored our Uniform Compliance Guidelines, we found that that prohibition was not as explicit as we wanted it to be. So this is now explicitly written into this section of Chapter 1. In case you don't do accounting for private corporations, just do accounting for the counties. So. Okay, various sections on judges and prosecutors. This is something that we have spent a lot of time talking with auditors and other county officials about. We have this series of cases in our state that make prosecutors, probation, courts kind of part of the county and kind of their own independent thing. We have done our best in this version of our Uniform Compliance Guidelines to acknowledge the way that judges and prosecutors and probation are slightly different than regular other county employees. And you'll see this in a number of different sections of Chapter 1. So I've cited 2 here. It's also in the record of hours worked section that we're going to go over in detail later because that has a lot more in it. But employee benefits, our compliance guidelines now make clear that judges and prosecutors are permitted to adopt an independent policy governing paid leave, or they may elect to adopt the county's policies on paid leave. Same with overtime. Judges and prosecutors may adopt a leave and overtime policy, again, provided that they maintain records sufficient to support leave balances and any payout of time earned. So again, this is not actually a substantive change that's initiated by the State Board of Accounts. I can tell you in so many ways this is just as annoying to Stacy and myself as it probably is to the rest of you, this additional complication we have with judges and prosecutors and probation and some other kind of county departments, kind of not county departments. But this is just a reflection of those realities. Okay, gifts and donations, 1.03Y. This was a relatively large change that we made to the Uniform Compliance Guidelines, Chapter 1. The appropriate body must accept a gift or donation. For counties, that always means the commissioners, right? So if somebody wants to give you something at the county, give anybody something at the county, the commissioner should be, at least in a pro forma way, signing off on it and making the final decision about whether or not to accept it. I think Stacy may actually be talking more about that during this conference. But that's clear for all units now. You have to actually accept the gift or donation. That's always been the guidance, but we wanted to make it more explicit. And then each gift or donation must be maintained in a separate fund. So you heard a little bit about this just now when Stacy was talking about SB 92. Lots of times, donors will put restrictions on the gifts that they give to all manner of local units. When they do that, you have to put it in a separate fund so that we know whether or not those funds are being expended in accordance with the restrictions that were placed on that donation. And then we also wanted to make explicit, there had been some debate about this for a little bit, we wanted to make explicit that gifts require an appropriation prior to their expenditure. So you do need an appropriation before you spend funds from a gift, even if it's a restricted donation. Okay, here's one that is really a substantive change, gift cards. Public funds may not be used to purchase gift cards unless authorized by statute or under the terms of a grant agreement. This is a hard prohibition, right? This is not optional unless you can point to a statute or some grant agreement that authorizes the purchase of gift cards. You can't do it. It's a no-no. We used to give, I guess at the risk of making this more complicated, when I started at the agency, we gave some guidance, in fact, that you could purchase gift cards. But if you did that, you had to follow about, I don't know, what was it, 11 different steps to account for them, to make sure you inventoried them, to make sure you were checking, to make sure they didn't walk out the door. It was a real pain. We've decided that even that's too much. So at this point, you should not be buying gift cards with public funds unless you can point to a statute or a grant agreement that authorizes it specifically. Okay, grants. We are going to spend, I don't know, maybe I see Stacy looking around. Do people have questions about any of these so far? Please feel free to put your hand up, interrupt in the middle of it if you want to. Okay, grants. The next 4 slides are going to be on grants. So we have a very lengthy, I don't know what it is, 2 pages, 2.5 pages section on grants now in Chapter 1 of the Uniform Compliance Guidelines. We cover a number of different types of grants, advanced grants, reimbursement grants, local matching grants, grants specific to schools. We're going to go over all those except the part that's specific to schools because that doesn't matter to you. The universal rule is that an audited entity that receives a federal or state grant must record the grant funds in a separate grant fund and make all related disbursements from that fund. So that's going to be universal across all types of grants. That's the universal rule. Put it in a separate fund. I think you guys were probably already doing that because county auditors are amazing. I promise you, not all of our units were as good as you guys, but that's now the universal rule with grant proceeds. When it comes to advance grants, so just to sort of put out the process for advance grants, right? The first step is the grant is awarded. The second step is that the grant monies are receipted into the county. And then the third step is that the grant monies are expended, right? When we have reimbursement grants, steps 2 and 3 are flipped. But when we have advance grants, this is the order in which things happen. Grant proceeds with advance grants must always go into a separate fund. All of the dollars must go into a separate fund. That's the universal rule, right? Disbursements are directly out of that same grant fund. For federal funds, no appropriation is required, right? Just for federal grant funds. But if any portion of an advance grant contains both some federal grant funds and funds from another source, then the total amount must be appropriated. So that's the way an advance grant is supposed to work. Do you have anything you want to add to that, Stacy? Okay. Reimbursement grants. So here we flip steps 2 and 3. So first, the grant is awarded, of course. Then you spend the money, and then you document what you spent, and you ask for money back. In my experience in local government, goodness, I feel like almost every single grant I encountered worked this way. So this was the overwhelming majority of grants that I remember dealing with. When you do that, you must record the financial activity related to the grant in a separate fund so that it can be properly tracked and reported. In that case, with reimbursement grants, this is like one of those very, very rare times where the State Board of Accounts is not going to harass you if you temporarily have a negative balance. That's explicitly stated in the Uniform Compliance Guidelines, right? Because of the nature of a reimbursement grant, sometimes you're going to reflect a negative fund balance while you're waiting for that reimbursement to come back. And again, with a reimbursement grant, appropriation is always required, right? Because you're going to be spending dollars and then asking for them back, you've got to have an appropriation. So, and all of that's explicit in 1.03 CC of our Uniform Compliance Guidelines. And then the last type we're going to talk about are local matching grants. An appropriation is always required for the local portion, and in some cases for the local and matching portion of grants. So that's going to be dependent on the type of funds you are getting, but you always want to appropriate the local portion. The local matching funds may be transferred into the GRAP fund or alternatively kept in their original fund and directly expended from their original fund. I don't know how you guys feel about this. Feels like it's cleaner to put all the money in the grant fund, right? That's just easier from an accounting perspective. I don't know, maybe I'm thinking about it from our field examiner's perspective mostly, but that feels like the easiest way to do it. But remember, the grant proceeds, so the non-local portion, must always be receipted into a separate fund, right? That's the universal rule across all grant types. Okay, any questions about grants? I see one way in the back.
That's why I was looking around. I knew there had to be a grant question somewhere.
I like that you're making Stacy walk all the way to
I'm
the
getting
back.
my steps in. Okay, on the advanced grants, when you said there's no appropriation needed, so can we just can they spend it out of the non-appropriated line, or do it still need to be in separate lines?
Yeah, go ahead, Stacy. There's a rule for federal grants.
So typically you have an agreement that you signed for the advance grant. So when you get the money, they're already agreeing to this is how much money you're going to spend. So most of the time you just spend the money. That's why there would be no appropriation. If you want to set up line items, that's totally up to you. It's not something, how many of you guys have line items in your grant funds, especially advanced grants? You can. This isn't something that's within our realm. It's more of a DLGF thing. But again, those aren't funds that are even, you have to do additionals for and things like that. So does that help? I mean, it's kind of up to your discretion is what I'm saying in a very weird way. Yes, either way. If you want to break it down so that you know exactly what you're going to spend out of that grant fund, especially for advance, you can do that. However, you don't need an appropriation is really the main point in that. Does that help? Okay.
Okay. Anything else on grants? Okay. Personalized items. This is one that I will tell you this particular guideline went through a lot of different iterations before it was published. I don't know, Stacy, it was a lot of iterations. So public funds may not be used for self-promotion or political activity. Officials may not use public funds to purchase personalized items bearing their own name, image, or likeness for general giveaways. We were running into a lot of circumstances where public funds, and there was one particular county office that was doing this a lot, and we'll just leave it at that, but public funds were being used to procure items that had elected officials' names on them in a lot of different places. And then those particular items with the elected officials' names on them were sort of being given away in a lot of different contexts to people. That is very close to political activity. It was close to campaigning, which of course you're not supposed to purchase campaign materials with public funds. And so the sort of end result of all of those actions, which we had taken exception to, is that we produced this part of Chapter 1. So if you have county officials, elected county officials, who are printing their names on t-shirts and then giving them away when they bump into members of the public, or if they're buying 500 challenge coins with their names on them, and then when they do public interactions, handing those out to people, those things are now explicitly prohibited by this section of Chapter 1 of the Uniform Compliance Guidelines. So don't do that. There are some limited exceptions you see there. This doesn't apply to items that are permitted by law. So if you can point to a statute that authorizes it, that's okay. Are part of an official employee recruitment or recognition activity. So those types of limited exceptions apply. Or if they support an identifiable program or activity, the activity of the office. So if you can fit it into one of those exceptions, it's okay. I will caution, this is a bad one to get too close to. So if you see other people in the county who are trying to do things like this with public dollars, you might caution them that this is the sort of thing that the State Board of Accounts is paying more attention to. So I don't think there have been any problems with auditors, just to be clear. It's other folks. So, okay. Stipends. Boy, this is a topic that's near and dear to my heart. You can get 7 lawyers into a room together, and you can have one of them ask a really simple question: what's a stipend? And then you'll get 7 different answers about what counts as a stipend. It's a word that's used to describe nothing and everything all at the same time. For our audit purposes, a stipend really is a fixed sum that's designed to cover expenses or offset costs, occasionally to offset some type of inconvenience. It's like a reimbursement or an allowance. So I know that I have encountered a lot of situations where what a local public official wants to do is they want to give a bonus, oftentimes a very well-earned bonus to somebody who has worked very hard and gone above and beyond. And they'll say, I just want to give them a stipend. And then you look at what they want to do, and it's not really a stipend. It really is just compensation. It's just a bonus. We now have a Uniform Compliance Guideline on stipends. Stipends must be authorized by statute, ordinance, or resolution. So you're going to want to be able to point to some place where the stipend that's being paid out has been specifically authorized. It must be for a specific amount and for a specific purpose. So if you're giving a clothing stipend, it's got to be for that purpose, right? And then we expect the stipend to be expended in accordance with the purpose for which it is given. And always remember, stipends are compensation, so any stipend that you're giving to an employee must appear in the salary ordinance. That's not new, but it's more explicit.
Second. Oh, you're good. You guys keep me on my toes. You don't want me to rest.
I'm just glad you have flats on this
I
year.
know, right?
So my question is, when you say by statute, ordinance, or resolution, if the stipend is on the salary ordinance, is that good enough ordinance, or do they have to adopt an ordinance or resolution saying that they're going to allow that?
I think that is probably good enough. I was dreading this very particular question. I think that is probably good enough. If you're asking me what I would prefer to see something saying the county commissioner said that the stipend was authorized as well by a separate ordinance or resolution. Do I think under the terms of this Uniform Compliance Guideline, I don't want to say what I was about to say. The best way to do it is to have it separately authorized and then also reflected in the salary ordinance. That's the best way to do it.
If a stipend is given for, equipment, clothing for a particular department, and person doesn't use that stipend by the end of the year, are they allowed to be given that money?
Yeah, so not under this. Well, usually it's more complicated than that, right? There are a couple of different ways I've seen this done before. So sometimes a clothing allowance will be something like a clothing allowance or clothing stipend will be on January 15th, you get $500, right? Sometimes it's go out, buy your firefighting gear, we'll reimburse you if you show us receipts up to $500, provided you could properly document it, right? So it can go in one of two ways. If you're describing The second way, I think that's pretty straightforward, right? The money doesn't go out the door unless it's been expended. The first way is more complicated. What I would recommend, given this new uniform compliance guideline, is that you get some kind of documentation from the employees who are receiving that stipend, evidencing that they spent money on the items or item that the stipend was for. That would be my recommendation. So.
I'm sorry, I just want to clarify. Beating a dead horse over here.
No, you're fine.
So I thought I heard you say that you want a resolution or ordinance from the commissioners to approve this stipend. Did I understand that correctly? Because in my mind, when I hear salary, I think council.
Yeah, so it's complicated, right? I think it would probably be the legislative body in most cases that you would want approving it. Now, the council, of course, has complete authority over the salary ordinance. So the salary ordinance part of it's going to be reflected by the council, but I would prefer to see the legislative body also thinking about it. That's, again, I don't know. This is very new, as I said, so some of our guidance may evolve and mature as we work through these new uniform compliance guidelines. But I think that would be the best way to do it, is to have the legislative body also do it. So, Stacy, do you have thoughts there?
No, and my own, no, but as I keep talking.
No, go.
So yes, I have thoughts. No, my only thoughts really are, it goes back to every single time we talk about salary ordinances and what we would expect to see, statutorily, there's not a lot of information required per your salary ordinance. This UCG is more clarifying from our perspective what our field examiners should be seeing when they go into audit and what they should be looking for stipends. So from Mike's perspective, where we would say maybe commissioners would need to be aware of this if it is for clothing and things like that, because we kind of fall into, yes, they are things that are considered compensation. However, it's local policy on how you're going to do this. Like if it's going to be reimbursement or if you get the money all up front. So what I would recommend is, obviously it needs to be on your salary ordinance because it is considered compensation. If you want to adopt a local policy and procedures over it that would fall under commissioners really, because it's saying, how are they going to make sure that this stipend, if it's clothing, how are we reimbursing it? Are we paying it all out? Making everyone aware of what the policies and procedures are over it. But then council is saying, well, we're only giving $500. How that's happening is more of a commissioner's, like, how are we going to do it? I think, and Mike, am I right or wrong? Or
No, I think that's right. And when I think of stipends too, you know, this is sort of a blended issue. There are dollars involved, but it's also very much often has an HR component to it, right? So how are we going to comply with OSHA requirements that exposed workers have steel-toed boots, right? One of the really, really common ways to do that is with a stipend to buy safety shoes, right? Whatever dollar amount is appropriate. So those sorts of things are certainly, it's kind of like salary. So in that sense, it has to be on the salary ordinance, and it should be something that the council is thinking about. But in another sense, it's sort of an HR consideration, which would be much more in the commissioner's realm than it would be in the council's realm. So.
Oh, someone else had a very good point. This would be something that would be included on your 144 that goes to commissioners anyway, which is a very good way to say full circle moment. Commissioners are aware of it, then it goes to council for approval.
And again, just to be clear, I'm saying I think it would be best. I'm not saying that it would be non-compliant if it's just in the salary ordinance.
So we still have some confusion here. When I first started, like our sheriff's department gave a $500 stipend, and we ran it through payroll. They got paid twice a year, I think $500 each, and so they were taxed on that. And eventually what they did was change their budget, so it was kind of like an operating expense paid out of a 2000 series, and the people no longer automatically got the stipend because the sheriff wanted to control and make sure his officers were actually using it appropriately and updating their uniforms when needed. We also have highway department. They're kind of given an allowance to spend. It's budgeted, not as a compensation, but more so an operating expense. So I guess just for clarification, do we need to start changing this to a one series expenditure and showing it on their taxes as compensation? It's going to unravel in a lot of different departments, like custodians, our DCD, they want something to identify them when they go from one department to another.
Whether or not it's going to be taxable is a more complicated question than I can answer for you. I'm very sorry about that. You know, it's how much of an allowance is taxable, whether it's taxable, is really going to be up to the IRS ultimately. This is something we used to do all the time with our unions. They would always want to dump all kinds of compensation into their clothing allowance because they would say, oh, great, that's not taxable, so I want as many dollars over there as possible. The problem with that is the IRS doesn't really look at it that way, right? If you put $24,000 over here as your clothing allowance, they're going to tax you on that because it's not a reasonable total. So really, if it's going to be not taxable, it already should be being expended for that purpose, and I'm not even sure if that's the way you get it out of that taxable space. If that's the question you're asking, I'm not sure if that's the question you're asking, but is it a little bit different?
I'm just looking for clarification is, do we have to consider this a stipend, like as compensation, or is it a requirement of the job that they have certain uniforms to wear? They're not gonna wear a sheriff's uniform if they leave, you know, or dealer's uniform. So is it really compensation or is it an operating expense in those type of situations?
Yeah, so in that type of situation, it should appear on the salary ordinance if you're giving them a clothing allowance, even for their uniforms, and they're going to go out and maintain it and buy it themselves. Are you making a?
No, her clarifying thing is even if it is paid for by the county, would it still be included on the salary ordinance?
Oh goodness, no.
That's what she's.
Yeah, if the dollars are never going into their bank account or something like that, I think you're probably okay in that situation. Yeah.
So I think the clarification is this is a county expense that
Yes.
they are purchasing clothes like $2,000 for uniforms during the year. The county is buying them for the individuals. To me, in that instance, it's not. Is that correct,
That's
Mike?
correct, yeah. The dollars never touch the employee's bank account, right? Neither through a reimbursement or otherwise, right? I think I've seen some setups where a county or a city will go out and they'll do a procurement and they'll identify like maybe 5 or 6 people who you can go to with a voucher, right? And then get a piece of equipment from those vendors, but the dollars never go to the employee. Even there, that's not compensation, right? They're buying it from a particular vendor, so.
One moment. Miss your guys' round tables.
You guys really
That's what you
like
guys want.
stipends. This is great.
Okay, I apologize because this is kind of along with her question. So if the money is going directly to the employee, then it is on the salary ordinance and it is paid through the salary or paid through payroll. And we have the right or must ask for proof of what they purchased with it. Oh, I'm confused on that part too.
Yeah, under this new uniform compliance guideline, the stipend, if it's a stipend, should be used for the purpose for which the money was provided to the employee. If it's a bonus, that's different, right? So if you're doing a lump sum bonus payment that's compensation, you're not calling it a stipend, it's not for clothing, it's not for some other reimbursement, that's different. So if you're calling bonuses stipends, you might want to go back and think about calling them bonuses now instead of stipends.
No, they just completely rewrote the clothing uniform. You remember the story. The policy 2 years ago to make it go through accounts payable, and they told us it was none of our business what they spent it on. So when we tell them that we need proof of that, that's going to go over like a lead balloon.
You can totally blame us.
Okay.
Just say State Board of Accounts is making me. I'm so sorry.
So I give you $500 to go buy your steel-toed shoes. It goes directly into your account. I ask for proof of whatever. What if you spent $400?
Yeah, so then technically you could be non-compliant with 1.03 GGG of our uniform compliance guidelines.
Okay. Thank you.
Sorry, yeah, sorry for the bad
We're
news.
just opening cans of worms today. We're just like to ruffle some feathers.
So in our particular county, that clothing allowance is part of a union contract. Does that make that differ?
No, Not necessarily. It does not necessarily make it different. We might take into account if you had like a 4-year collective bargaining agreement that had that term in there already. You could also, I don't know what your relationship with your unions is, you could go to them and say, we need to execute an amendment retitling some of this compensation from a clothing allowance into a bonus, something like that. So there are some options there. Again, not all unions will sit down and do that with you. There may be tax implications, or they may perceive that there are tax implications if something goes from being a reimbursable expense to a bonus, so that they may not like. Okay, I've gone way over. Do you want me to just finish out the presentation? Do you want to like switch out here? What do you think?
How much
Stacey?
longer do we have?
Oh man, I've got 5 more slides.
No, you go.
Okay,
Power
going.
through.
I'll go as fast. I'll talk fast. Record of hours worked. This is a big one, guys. This one actually appeared in the version of the UCGs, Chapter 1 of the Uniform Compliance Guidelines that we issued last year. So first off, the first thing that 1.03XX now says is that you have to have a local timekeeping policy. You have to. Each audited entity must adopt a time reporting policy that covers all employees, whether they're FLSA exempt or non-exempt, okay? And it has to identify the process by which employees are going to report their time and how you're going to store that record of hours worked, okay? For most county employees, so we're not talking about probation, courts, or prosecutors' offices, but for most county employees, all employees have to maintain a record of hours worked. And an individual knowledgeable of those hours worked has to look at the time reporting form and say, yep, Bob worked on Monday, Tuesday, he was off Wednesday, and then he worked Thursday, Friday. And they have to sign off on it. Somebody who would know whether or not Bob worked those actual hours. Again, if we were in the private sector, FLSA exempt employees would not have to do this. But because we have to worry about annoying things like ghost employment, you have to track it for everybody when you work in the public sector, except for courts and prosecutors and probation employees. They get a little special carve out here. Their FLSA non-exempt employees have to maintain a record of hours worked, so we have to know when they're clocking in and clocking out. That's required by federal law. That's not imposed by the State Board of Accounts. If you are a non-exempt employee anywhere, you have to be tracking your time. Otherwise, employers will cheat their employees out of overtime. So they have to be tracking their time. Exempt employees have to keep records that demonstrate that they're not committing ghost employment. So we have to know that they're being assigned duties, but they do not necessarily have to keep a record of hours worked. That said, in courts and prosecutors and probation offices, they have to keep a record of hours worked if there are local leave benefits that require record keeping. That means if you're gonna get, say, 4 hours of vacation leave for every hour worked, or for every hour, wow, that'd be a good deal, for every week worked, or every 2 weeks worked, then you have to track your time. You have to keep a record because we have to know when that vacation balance is being reduced and when it's being increased. And if there's a payout associated with your PTO balance upon separation, we have to know that that payout is in accordance with the record keeping of the county. So it's not necessarily required, but if that's the way those offices work, they have to be keeping track of time. Does everybody follow that distinction there? I got one hand. For elected officials? Great question. That's the next slide. So elected officials are not required to maintain a record of hours worked. That's by law. So there are a couple of very, very interesting limited exceptions, though. We have had a couple of, I'm just going to say, sheriffs who, when they left office, got nice payouts for all of the PTO they didn't leave. And when we said, oh, that's interesting, where were you keeping track of the hours that you worked and you earned all that big PTO bank that you got a payout for? They said, well, I don't have to keep track. And we said, well, if you're getting a payout upon separation, you definitely have to keep track. So if those types of rules apply to elected officials, they have to be keeping track of their time. Also, if an elected official has a second job with a public agency, there's actually a statutory requirement that they track their time. So in those two limited circumstances, you do have to track your time. I'm acknowledging that I'm speaking to a bunch of elected officials right now, but those are the limited exceptions. Otherwise, you don't have to. Does that make sense? Okay. And then a couple of other things, really the last slide here, making electronic payments. We do not like to see local government units authorize third parties to go in and pull money out of their bank accounts. We have said this for years now that you should not be doing that. We got some pushback from some of our units on whether or not
They could authorize certain utilities to come in and just directly withdraw funds from their bank accounts whenever they wanted, instead of having the financial officer authorize the funds to be pushed out of the bank account. There were some folks who were not satisfied that our compliance guidelines were clear enough on that point, so we have made them ultra crystal clear. You cannot do that unless it's specifically authorized by statute. Really, the only entity that I know of that's authorized to pull funds out of a public entity's bank account is INPERS. Is there another one, Stacy, that you know of? That's the only one I know of. So if anybody but INPERS is trying to take money out of your accounts, you shouldn't be allowing them to do that. You should be pushing it out of your account, if that makes sense. Is there a federal one as well? IRS, yes, thank you. IRS can do it too. We won't mess with the IRS. So, okay. Thanks, guys.